Welcome everybody to another Deepvue subscribers webinar. Today we'll be talking about a really fun topic and something that I really enjoy talking about, and that is finding and trading VCP setups with Deepvue. So we'll be diving into how to find these setups as well as tight areas, and also potentially how Deepvue helps you do that easier. That's the entire goal of today. So throughout the session, if you have any questions, please let us know in the chat and the Q&A section. And let's go ahead and dive right in. So first, here's a little bit about the agenda. We'll talk a little bit about what is a volatility contraction pattern, or VCP. We'll also discuss tight areas, which are part of that VCP pattern and are kind of the actionable area as well. We'll talk about how to visualize tight areas with the relative measured volatility indicator that we have as a proprietary indicator here in the Deepvue platform. We'll touch on how to screen for VCPs in Deepvue and find these setups really easily, as well as 3 steps of trade execution when it comes to trading VCPs. And finally, we'll do a little bit of demo here in Deepvue Live for you guys to bring it all together. So really excited for this one. Stick around until the end. And as always, if you have any questions along the way, drop it in the chat here. All right, so first, what is a VCP? Many of you guys, I'm sure, are already familiar with it, but it's good to go over nevertheless. Essentially, it's a constructive base pattern in a longer-term uptrend. So typically, they occur above a rising 200-day moving average, and we see a strong uptrend and then some type of base consolidation. And VCPs are characterized by tightening in price and volume from left to right during the base, and it indicates accumulation, this tightening, and likely a continuation of that prior trend once enough sellers are worn out and enough demand comes in as well to push the stock higher through the base pivot and through the actionable buy points. The term itself was coined by Mark Minervini, but this pattern, has pretty much been the bread and butter of all the legendary traders going back in history. That includes Darvis, William O'Neill, all these people pretty much looked for this exact same pattern, and each of them had their own methodologies and ways to describe it. But if you line up kind of their strategies, they'd often be buying at almost the exact same point as the stock breaks through the line of least resistance and activates buy points. So as I mentioned, it's been called Darvis boxes, cup and handles, springs, coils, all this stuff. It's all kind of describing the same base pattern. And over here on the right-hand side, you can see my cursor here. Here's the prior uptrend. This is the base that tightens from left to right. I don't have volume here, but this would be declining overall during the base. Maybe we see some spikes up on these moves higher, but overall you should see a decline in volume, and then on the breakout, see an explosion in volume. That's kind of what we're going for. And we've got a lot of examples, real life examples, to go through today in this presentation. So VCP, cause or effect. A lot of people think it works simply because people, see it on the charts and trade it and buy it at the buy point. And that's not necessarily true. Definitely that can help move it on the breakout day, but the overall pattern is formed because of supply and demand. It's a function of supply and demand. What really moves stocks is accumulation by the largest funds in the world, the people managing billions and billions of dollars that are accumulating the stock throughout the uptrend. They're absorbing the sellers during the base. We see, less and less sellers in here. We see the funds kind of propping up the stock, accumulating slowly during this base and continuing to accumulate once it breaks out and continues to trend. So this overall base pattern, it's not created by traders managing, even $1 million accounts. It's created by the people who are accumulating, hundreds of millions of dollars worth of shares, 100,000 position shares, and they're doing this when the stock is pulling back. They're absorbing that supply as it comes to market. They're not selling, they're holding for the longer term, because in their directive, in their view, the stock is likely going much, much higher because it is a high growth stock, or similar, there's some type of catalyst that they view that the stock has a much brighter future. So they're looking to accumulate the positions, and that's what creates uptrends and also creates this VCP pattern during bases. So I pretty much went through these already, but basing contractions are caused by sellers getting absorbed, and with each pullback during the base, you often see price action tighten and get tighter and tighter because less and less sellers are coming in at each point. And that's what kind of creates the VCP type look where you can draw different waves down, which get tighter and tighter as we go. So that's pretty much what creates this VCP pattern. It's not just something on the screen, it's a result of supply and demand, which creates the market. So I wanted to go through, some different examples. I mentioned that, this pattern has existed for quite some time. Everybody has kind of different names for it. There's different categories of bases as well that qualify as VCP patterns. But to focus on William O'Neill and his cup and handle, I think many of you guys are familiar with that as well. And he definitely looked for that volatility contraction. If you look at his chart markups, everywhere on the chart, he mentions tight areas, tight closes. He's buying from, range contraction, buying on, huge volume up moves from those range contraction on the right-hand side of a mature base. So this, I believe, is Yahoo. I forget what stock this is, but in both instances, you see this VCP pattern where from left to right, price action gets tighter. You can see these waves down are, less and less severe. Volume is basically nowhere to be seen on these down moves. On up moves, you do see volume coming in. And then on that breakout, we want to see as much volume as possible through that buy point. And we'll discuss, buy points much more specifically later on. And this is a weekly chart. O'Neill primarily traded off of weeklies. I typically look at VCP patterns both on a weekly as well as daily basis. My time frame is more of a swing trader, but kind of the benefit of VCP patterns is it's kind of agnostic to your time frame or style, because regardless of if you're a day trader, swing trader, weekly trend trader, all of that, we can all make use of this type of buy point. And if our strategies align on one single day, that helps push the stock even higher, further, and faster. And this pattern occurs on many different time frames. There's many different day traders who use this type of pattern to trade intraday. And that's because, again, it's a function of supply and demand. If we have a gap up in the market and then we pull back, consolidate, tighten, move up, then tighten again, there's many people who look to trade that pattern intraday as the stock expands again. So this isn't just for growth stock trading, although that's kind of our focus today. So again, O'Neill looked for a lot of tight weekend closes. That note is all over his chart markups. He looked for volume dry up in the handle, which is, volume contraction. Looked for larger volume up weeks, lower volume down weeks. That's a sign of a constructive base. And he's looking for volume explosion on the eventual breakout. And I just want to point out this VCP, this is almost a VCP within an overall VCP. And often you get kind of this fractal nature here of these setups where you get patterns within patterns. And just want to highlight this: tight areas equal accumulation. Here's another example. You've got a 22-week base. We have a prior uptrend. We've got weekly closes, tight weekly closes within the base. Then it tries to move up, fails, sets up again, tightens up again. And then this is the buy point here, which eventually works. And you even get a tight area, 3 weeks tight closes again after the eventual breakout, which is another point that I want to stress, that you can, use add-on buy points after the breakout from the base. But nevertheless, identifying these tight areas, whether it's in the base, right before the breakout, or after the breakout, allow you to, one, identify accumulation, and two, basically manage your risk really tightly, as we'll get into if you're looking to add after that point. Here's another example. Stan Weinstein also looked for essentially volume VCP setups. This is a graphic of his stage 2 continuation setup where you've got the prior uptrend. This is the 30-week moving average. Then we've got a price and volume contraction. It coils tighter and tighter. And then his buy point is right as we break above this line of resistance and continue on with that trend. And you can see in the volume here, we've got high volume during the move up. Then during the base, you see it get lower and lower and then explode on that breakout day. So even Stan Weinstein looked for VCP type setups. All right, let me get a drink of water here. All right, so tight areas, why are they so important? I've hinted at this already, but we're looking for tight ranges, tight closes, and low volume during these times. And what tight areas indicate is a lack of sellers. Basically, sellers are coming into the market. They're offloading any positions they want. Maybe they think the stock is done, or for their time frame, the stock is done. And basically, the larger funds or people who want to hold for the longer term are pinning the stock at that price and absorbing any of that selling coming in. And there's not really much coming in. It kind of is a sign of the sellers getting tired. And these tight areas, especially when there's low volume, it's a key sign of accumulation as buying pressure kind of pins the stock to a certain level. And the best thing for us is not only is it a sign of accumulation where it can occur near the bottom of the base or later on, but it can also be used as an entry tactic / setup. One, because it forms kind of a clear pivot point often where you've got a range and you've got a defined high of that range. And this tightness, this price and volume tightness, also allows you to manage risk tightly and know quickly if you're right or wrong, and enter at that precise point when we're breaking above the range, set a really tight and logical stop below the range or below the low of the buy point, and allows you to manage risk just that much tighter and keep a tight stop loss, which over time, of course, is what we're going for, to keep that risk as low as possible. So here's an example. This is TTD in 2020, and I've got examples from many different years here. So we're not looking just at a great market that was 2020. TTD, this one set up right before a 200% move from this buy point. We see the correction here. We get a few corrections in here. Then this last correction, you can see how much more shallow this is. And then it kind of explodes from the buy point. We do see a pickup in volume. Not the most explosive example, but it's good to show kind of reality. We don't always get amazing volume, and volume did come in later as well. But we see a nice breakout through this clear defined buy point. This was much tighter than the prior corrections, which is kind of how it goes when it comes to the VCP patterns. And I wanted to include this example because we often get this shakeout here, which kind of stops out anybody who's been accumulating, kind of resets the stock. And often in the next few days after a shakeout is when the stock likes to go. So keep an eye out for these shakeouts. We don't always get a perfect breakout above the range completely on schedule. Often we do get a little bit of volatility before the stock actually goes ahead and goes. And sometimes we can even get a breakout. It fails, it tightens up again, and then re-breaks out. And that's happened, more and more as more and more people are kind of trading this type of setup. So this is a great example from 2020. Again, we see the first correction, second correction, the last one a lot more shallow. And then right near all-time highs, we see a nice breakout from this tighter range. And we'll touch on RMV later on, but you can see, clear defined tightness right here. Then we get the shakeout, which increases volatility, but then we see a decline in volatility, RMV pulling back before we get that last push higher. So RMV is really helpful in identifying tighter ranges within consolidations and potential buy points as well. And here's the same setup on a weekly chart just to show you how tight it was during this last contraction. You can see how close all these closes were. And you can see RMV on a weekly time frame goes to 0, which means this is the tightest. These are basically the tightest area of the past 15 bars on a weekly basis, which again is another indication of tightness. And on a weekly, this looks really textbook. We have this breakout on a pickup in volume above these highs, and that's what really starts the move all the way into the 90s, split adjusted, which is over or nearly a 200% move. So again, nice cup and handle here, as well as a VCP type pattern. And these 2 weeks, you might notice as well, the volume is a lot lower than the prior move up. And that's again what we're looking for in the last contraction, and throughout the base, a general decline in volume overall compared to average. All right, so here's another example. This is a daily chart of Shopify back in 2016. It had moved off its lows from the longer term consolidation it made after its IPO. And then it forms a nice VCP pattern where we see one contraction, two contractions, and then this last contraction again. Look how much shallower this is compared to these prior contractions. This was very tight. I think, from this high to this low, I think only about 5%. And then we get a nice pickup in volume on this breakout. We almost set up again constructively. And there's a few kind of follow-on buy points where again, we kind of tighten up for a few days, form a range, and continue higher. You can see volume really comes in later on. But this is the first kind of VCP buy point. We've got a clear defined line of resistance, lines up nicely with this daily pivot. We break through on volume. We saw tightness as RMV pulled back to close to zero during this last contraction and got a lot tighter than the recent move. And then from this point on, this led to a multi-year move, but also over the next year, nearly a 200% move. Oh, I also want to point out here again, we see tightening. And this is a little bit more subtle because there is some volatility. We see some highs up here, some lows down here. But overall, over this 10 or so day period, we pretty much stayed right near 2.64. And of course, this is split adjusted here. And this tightening is something to look out for. You can see RMV kind of shows it. We get tight right near the end before this push up. But this might not be buyable, but it's a sign of accumulation where these sellers came in, we saw a pickup in volume, but then they were being absorbed and people were supporting the stock. It was being accumulated and it never pulled back to this area. Never undercut this area. We did pull back one last time, but it was supported during this zone and being accumulated and leading to some nice tightness that could have been a tip off to really pay attention to the stock and look for an eventual buy point once the base became really mature. Because at this point, we've just had one contraction and kind of ignore the rest of this stuff to the right. If we're just in this area, all we can really say is, there's signs of accumulation. It's being supported here, but it's not yet mature enough to really look for a buy point. We've only been, a few weeks within this base, and it's going to take a bit more time to get ready for a proper buy point. But definitely want to point out the tightening here that RMV help shows, and you can also spot on the weekly charts. All right, so this is another base just a few weeks later. This base here led to an uptrend that kind of starts and ends with this base and consolidation. This is pretty tight here from high to low. And again, we see tightening from left to right. Volume at the end becomes a lot smaller. You can see the moving average of volume declining overall. And then this is an amazing last tight range here, which really shows exactly what we're looking for, where RMV goes to zero. Volume is well below average, and even that average is a lot smaller than it was overall within the base. So we see a decline in volatility in price and a decline in volume as well. And then we get a nice early breakout through this range. And then the next day we follow through on huge volume and really break out of this entire structure. And this leads to a continuation of the move. And again, a really strong gain over the next few months, continuing on with this multi-year move. So this is another good example from just a few months later of a shop back in 2016. Tyler, any questions so far that I should pause here and address?
Not so far. There's one there. Suggestions for what to put in the screen besides RMV. I think you're going to talk about how to use RMV in the screener in a little bit, eh?
Yeah, I'll walk through how I designed two of the preset screens, and also when we look at it live, I'll touch on a few things that I've been using. So great question, Ken. And RMV is a little small to see in the screen, but we'll share these slides, and of course on your own screen you can go back to these same examples, open this up. But I definitely want to show price action is most important, volume as well, and RMV together. So we're focused on the overall setup, which is why this is the biggest portion here. All right, so RMV and VCPs don't just occur, after an uptrend and a nice move. The same kind of characteristics also occur during constructive IPO bases. So right after a stock IPOs, this is Google back in 2004. You can see it moved up initially, then formed its first kind of IPO base, and then got super tight on the right-hand side again because it's being accumulated. That's what's creating this tight area where we're seeing tightness in price action, volume much smaller than these first few days when it IPO'd. And here RMV goes to zero, where it basically suggests this is the tightest area that's ever traded. And again, right before this move upward, we see RMV go to zero. And for IPOs, I've switched my RMV to 5. That's what I do for IPO bases, simply because there's often not 15 days of price action to judge volatility against. So for IPOs during their IPO base, that's kind of what I would suggest. I would change the input here. You would hover over this, click the gear icon, and change it from 15, which is kind of the standard, the default that works pretty well in most cases, to 5 when you're analyzing these IPO bases. That allows it to basically pick things up a lot faster and highlight these tight areas for you guys. And from this move off the bottom, great action and a really nice trend. And obviously, we all know that Google went on to become one of the greatest stocks of all time. So RMV, looking for VCP action, tight areas would have helped you position in this name. And you can take this lesson and apply it to future IPOs and growth stocks going forward. Then I also want to highlight tight areas that don't just happen, in bases and at the pivot, but also often after explosive earnings gaps. This type of setup has gotten a lot more popular in recent years and a lot more common as well when stocks surprise on earnings. And these type of moves can often create and start, multi-year moves. We see a lot of that happen. And this is Tesla back in 2019. We had a gap up on huge volume, fall through again. And it's tough to position on, the first day or even the second day, depending on your entry tactic. But often what really works well in the stocks that end up, making large moves is waiting for the first tight area or the second tight area or the first pullback to a moving average. That can be a great spot to enter where you can manage risk really nicely. And you're seeing signs of accumulation again because of that tight area. So Tesla in 2019, I think they surprised and were profitable for the first time here. It moved up strongly, then formed the first tight area here. This was a buyable range where you can buy here. We see a pickup in volume as well. It moves up, pulls back here, forms another tight area for basically 2 weeks or so. And this is, again, tradable. And then from this point on, we break out of this range. You can see a pickup in volume down here. Within this tight area, RMVs goes to 0 multiple times. And from this point on, it advanced 190% in about 70 days before the 2020 correction, which basically reset it again, created a new base, and set up a whole nother VCP. But that's another example, and everybody goes over that example, so I wanted to show something a little bit new. But definitely after these earnings gap, you can use RMV again to look for those tight areas, and you can experiment with changing the number of days again from maybe 15 to 5 because this gap up is hugely volatile, and it maybe will skew some of the price action values and the RMV values after that. So if you switch it to 5 after earnings gap, you can maybe see tightening a little bit more clearly. But definitely this can be useful, very useful in also identifying this type of pattern in addition to the more classic, base type VCP. All right, so train your eyes, look for tight areas in VCP action. Again, look for tight ranges, tight closes on a weekly basis, low volume accompanying these up the right-hand side of a base. And tightness can be even as little as 2 to 3 days, but often, as we've seen, it can be 5 days, 8 days. Maybe there's one day where we see some volatility, but then tightens up right again. That still kind of counts as a tight area. And tight relative measured volatility in Deepvue can help you identify these. And what I look for is RMV of less than 10. And RMV, we'll get into what exactly this is. This is basically a way to judge the current volatility compared to what the price action is normally doing for that stock. So it's relative to itself. And basically a value of 100 in RMV means there's price expansion. Price is very volatile relative to normal. A value of 0 means there's price contraction. Price is a lot tighter than normal. So we're often, for volatility contraction patterns, looking for values of 0 or at least less than 10, which is pretty darn tight as well. And with RMV, as I mentioned, you can change the period. The default is 15 days. But like I mentioned, there could be instances where you want to see it a little bit more quickly, and you can change that to 5 or a different value. And here we've got PLTR. This was another great IPO base to study, where right at the end here, RMV went to 0 right before the breakout. It's amazing how that happens. If you go back and look at your trades and look at breakouts, we often see RMV go right to 0 before that happens. We have a nice price expansion trend move. It sets up another base, and then again, RMV goes to 0, and we push up here as the base becomes more mature. So I highly recommend checking this indicator out, see if it adds something to your process, and we'll also discuss how to basically screen for these opportunities using this indicator to help speed up your process. All right. Before I go on, any questions about the RMV indicator? We'll talk a little bit more about it when we actually get into Deepvue. But Tyler, anything that you think I should really emphasize when it comes to this? Any questions that you see in the chat or are often asked?
There's one question about, will the RMV decline when a downward trend line also compresses? So like most of these examples, it's price action going sideways versus in a downtrend.
Yeah. So if price is getting tighter, it doesn't matter if it's going up a little bit, sideways a little bit, or down a little bit. It's all about, how tight are the highs, how tight are the closes, how tight are the lows. So it's the actual price action itself. So I hope that answers it, but it doesn't have anything to do specifically with downward trend lines. It's just looking at the price ranges. So your question, does RMV work well on daily or weekly charts? I primarily use it on daily, but on weekly it works quite well as well. If we go back to the TTD example, with it basically can help you identify 3 weeks tight or very tight weeks, because you see here very tight price action, and RMV on a weekly goes to 0, while on a daily you can see it got tight here, but it's moving a little bit higher because we did have this volatile day here, and it's less tight over here relative to this move right here. Yeah, and RMV it works on any time frame as well. It's basically a way to objectively define price tightness or price expansion. And as we all know, stuff trades either tightly, it's consolidating, or it's trending, it's expanding. So it's a way to objectively measure that and find those key points where price action is getting really, really tight, and we can expect a directional move to the upside or the downside. All right, so screening with, we'll get to that in just a second. Stephen, I see your thought there. But first, screening for VCPs, tight areas in Deepvue. Typically, you're not really able to do this because it's kind of a complex pattern that is tough to define. But with Deepvue and RMV, you are actually able to filter out a lot of the noise and get a lot of great tight areas right to your screen in just a few simple, presets and filters. So over here, we're showing the power and tightening preset. This looks for stocks that have been trending powerfully. They're in the top percentile in terms of 3-month or 1-month relative strength. And now the RMV is coming down tightly. We're less than 10 here. That's kind of my measure of tightness. We're tightening a lot. Now, just because we're under 10 does not necessarily mean visually you're seeing extremely tight action. It could just be that the former action was extremely volatile. So again, everything's relative. So depending on your preference and also the market conditions, what things have been doing recently, you may want to tweak this number and make it less than 5, or if things have been really volatile, less than 15. But less than 10, I think, is a good level to put it at, because then you can go through visually and really find the stocks that are really tight, and find those nice VCP tight area opportunities. Then I want to make sure it's a stock that can move. So I've got a minimum in terms of average daily range. I've got a minimum for dollar volume as well to try to get rid of those penny stocks that I personally don't focus on. Of course, you can go in and take this out and make it your own. I'm looking for ADRs as well as common stocks. I want to be above a 50-day moving average and be above $5. And that pretty much sums up the power and tightening screen. A nice screen to find, leadership quality names with high relative strength that are now calming down, tightening up. And me personally, I also love to find these tight areas near the 21 EMA. So I might add a condition that it's within a few percentage points of that moving average. That could be a nice tweak to the screen. Over here is another preset that you have in Deepvue, and I'll show you guys how to find these in just a minute here when we jump into the application. But this is the tight range preset, very similar to a lot of these criteria, but it's looking for some different things and defines a tight range a little bit differently. So we're above the 50-day moving average. RMV is less than 10. We're at least above the 200-day moving average. Dollar volume is a little bit higher. ADR is a little bit higher, so needs a little bit more movement. And then here, I am looking either for the past 5 days to not really be changing much. So we're in a range. of, -4 to 4%. So give it a little bit of room to oscillate around, but generally we haven't made much of a percentage change difference in the past few days. And double inside day is true, or double inside day is true. So either we're in the range, or the past 2 days have been tightening up a lot. So this is really kind of my favorite screen when it comes to finding VCP type action in tight areas, and does a great job of finding stocks that are really setting up nice and tight for everybody. Yep. So that moves on from screens, and we'll take a look at those live in the app in just a minute here. And moving on to the last slide here, 3 steps for trade execution when it comes to VCPs. First, of course, there's screening and ideation. In order to trade a stock, it needs to come into your universe, pass across your screen somehow. So you can incorporate, these type of screens into your process, into your routines, look at these weekly or daily, and then you can basically add that stock to your focus list. And I'm always looking for the tightest setups, the most mature basis, as well as throwing in any other criteria. For instance, I might consider earnings and sales growth. Tyler might not. He might not care too much about that and is purely trading the chart. But it's up to you in deciding how to finally build that focus list and create a list of the most highest potential stocks for your system. Then after that, what you have to do is place alerts just under the pivot buy point. And then when those trigger, look for high volume run rate. We've got that built into Deepvue, as we'll show in just a minute. And on that breakout, you really want to see explosive price and volume moves, ideally run rates going over 50% above average, something like that. And the higher, the better. And ideally, the stock just takes off and goes and sees follow through. That's kind of the best case scenario. And over here, I've got an example of an alert notification that we've kind of created to help you with this process in buying breakouts, to give you all the information that you need right in one place. So we've got the percentage change on the day, plus 21%, Tesla rising above my alert. This is an old alert that I just had a screenshot lying around from. We've got price, we've got the relative volume. So this was just under 1, just under average for the day. Ideally on a breakout, this would be 1.5, 2, even 3, something like that. That would indicate really high volume coming through your alert. And then this is where, I really love this data point, the price surge. The price surge is basically the percent change of the past 15 minutes. So it gives you a sense of the recent price momentum. So we get a sense of the price surge, the past 15-minute move, the relative volume, the price, and the overall gain on the day. All that comes together into an alert that just by looking at this, you can get a sense of, all right, the stocks are really moving. I got to bring it up on my screen and see if it's actionable. So those are kind of the 3 overarching steps for trading these VCP type patterns. All right, so that's pretty much it. We'll jump into the live application and then I'll pause for questions quickly, and we'll see what more we can cover for today. So as I do that, Tyler, if you want to pick up any questions that you think I should answer first here.
Yeah, there's one here that's related to sort of the VCP base pattern. So there's a question, there's no name, so I apologize for that. But will the screens pick up pullbacks in a trend as well as the larger VCP base patterns? My immediate answer is yes. But if you want to answer that one, that would be great.
Yeah, the screens pick up tight areas. They can occur at the bottoms of bases. They can occur after stock is already broken out. It's looking primarily for tight areas of the recent price action. You can add criteria to find stocks that are more in the bases by saying it has to be, a certain percentage above the 50-day moving average. It has to be, below, 52-week highs or something like that. But the presets that we've created are specifically looking for tight areas, not so much the context that they appear in. Is RMV based on ATR? It incorporates stuff similar to ATR, but that's not really what it's using to determine tightness. It's something that we've come up with ourselves. All right. So with that said, let's dive into the screens themselves, and as well as answer any of your questions. So first, looking at the tight range screen again. Well, first I'll show you how to access the presets. So in Deepvue, what you want to do to load up a screen, let's say we've got nothing loaded up. You want to click this drop down arrow here, give that a click. go over to screener presets. This is basically, if you're under save screens, is where any screens that you've created live. But to access the ones that we've created for you and are developed by top traders and all of that, you want to click screener presets. To find the Deepvue screens, go over down to the Deepvue folder. The top traders folder is where we've got screens from Oliver Kell, Stan Weinstein, Qual Maggie, a lot of top traders here. But the RMV type scans are under Deepvue, and we can either load up tight range or power and tightening. We'll do tight range first. Excuse me, and we can take a look at the criteria again. I went through it all already, but basically this one is more looking for stocks in ranges specifically. That's what this last group is looking for, and I'll zoom in a little bit. It might be a little bit tough to see, but we're not looking for much percent change the last 5 days, or we can have a double inside day. And an inside day, for anybody who doesn't know, that's when the entire day's price action is contained within the prior day's price action. So the high is less than yesterday's high, and the low is higher than yesterday's low. It's another way of identifying contraction on a very short-term basis. And double inside day just means that there's two of those in a row. So we're getting tighter and tighter, or we're just overall within a range. And depending on where we are in the market cycle, we'll get different types of results here with the screen. But you can see all of these, the last few bars are tightening up nicely. FRPT, GIL, you can see this is a double inside day here. And it gets tighter and tighter. And depending on where these are within their cycles, you can see that this is a gap up that then tightened. Some of these are on the right-hand side of basis, so it kind of depends what you're looking for. But personally, I trade both up the right-hand side moves as well as earnings gaps. So it's kind of perfect. It's kind of a 2-for-1 screen of all the stocks that I like to trade. So that is the tight range screen. Now let's load up the power and tightening. So this is looking less so if the stock is forming a tight range and more just looking at, has it been a really strong prior leader, and overall it's tightening up. So AAOI has made a really big move and its price has expanded, but over the last few days, it actually is getting tighter in terms of its action. So that's what the screen is looking for. Same with ACMR, really nice move up here, but then the last 3 days are getting tighter. Adobe, again, starting to form a range. So this is great at finding stocks that maybe starting to form a tight area that you can go ahead and trade. APLS getting really tight on the right-hand side. ARCB, you can see gap up, but now it's kind of going sideways. So it's a good way to find stocks that are starting to consolidate and tighten up that have been really, really strong. All right, that's pretty much it for what I wanted to cover today. And now I think we'll pretty much go ahead and open it up for questions. And Tyler, before I go on, is there anything you think with the indicator itself or anything I may have missed that I should expand on?
No, I think you covered the indicator and you know, some examples on how to use it quite well. You know, there's obviously different ways that people can incorporate it, and I like how you sort of pair it with the inside day and the double inside day screen. There's lots of different ways that you can use this. I think, well, you showed a few examples, but the example that was asked in the chat there by Stephen was Uber. How it sort of came straight up off the bottom and now it's gone sideways for a couple of days, and it's showing an RMV of 0, but like it actually kind of makes sense, right? Because it's been very volatile. It's come straight off the bottom and now it's going sideways in like a 1% range for the last few days. And you can see the RMV is like dropped right off.
Yeah, exactly. So if you think about it, it has been going up, so it's not really forming overall a tight area, but the past few days are pretty much going sideways, and it's getting much tighter relative to the recent price action. We had a gap in there, expansion bar here. So again, it's comparing itself to the past 15 days. That's the default. So over the past 15 days, it's going down low here because we are contracting relative to those past moves. So it's great at spotting tightness. Sometimes when a stock's in trend, you might not think it's tightening up, but it actually is. So that's why it's getting near 0 for Uber. When increasing the time frame on RMV interval, negate the effect of a big move artificially showing a low value on RMV. Yes, exactly. Yeah. So Yusuf, that's something that I've done a little bit. If you increase the look back period to 200 or something like that, then it's more giving a sense of in a longer term span of the stock's volatility, where are we, in that range? And then a 0 would really mean it's getting really, really tight. The Zoom thing's holding it back here. So for instance, this area, this is where we really get close to 0, and you can see how tight this is relative to everything else. So yeah, exactly. Expanding this gives you a more true sense of what the volatility is. But I'm more interested in the relative volatility because I kind of want more actionable signals. But you could definitely play with this and see what suits your style. Again, I'll switch this up to 5 for stocks that don't have much price action or I want to get a shorter term view. But for the most part, I pretty much leave it on 15. So really good question. Will there eventually be scanning dependent on a time interval based on 65? Yeah, I think eventually we'll bring that into effect, Jake. Right now, we've only got the daily RMV that's screenable, but I definitely think 65-minute or weekly interval would also be pretty helpful.
Before we move on, Richard, can you just open up your settings in the RMV indicator and just maybe quickly talk through those? There's a question on that.
Sure. So the default is 15. That's pretty much where I leave it at. That based on a lot of testing and looking at different stocks, this team seems to work out quite well. And then in terms of my individual settings, I have kind of the 3 different colored zones. I open up the top one a little bit to 30. Then my middle zone starts at 15, and then my lowest one is under 7.5. So under 7.5 is getting really darn tight. So that's kind of where I decided to put that there. But you can play with this as you will. I like just kind of tracking it. Is volatility declining? That's also a good way of using this. But I really get interested in a stock when RMV gets under 10 and especially under that 7.5. And then my visibility, it's pretty much the default. So the big thing is that I've just switched up this to 30, 15, and 7.5. Yeah, thanks for the question, Jake. So recently, there's been a lot of gap ups that have been very useful, where the RMV has been really useful. Roku is one. Again, these are all going to show tightening because this price expansion is so big, but you can see it's actually tightening up really nicely in this range. So it's getting well under 10, and this is one that's been acting really well. Dash is another one that I've been watching pretty closely, and it's tightening up again, but it was getting tight in this area. But there haven't been a lot of pure VCP type moves. VRT was one. This got really tight here. You can see it goes to 0 right in this area. Set up a really nice pivot, then had a shakeout day, and then broke out the next day. So those are a few recent trade opportunities using RMV and VCP type setups. All right. Any other questions? From Fred, does low RMV just mean low volatility that could be occurring on an up-down trend? Does not mean consolidation sideways. RMV is looking at the recent volatility over a look-back period and saying, what does the very recent volatility look like compared to that normal? So by default, we're looking back 15 days and seeing, how is volatility relative to what usually occurs in that 15-day period. So it's always kind of a moving measuring stick of what the volatility over that period looks like, and then judging the recent price action to that. So it does a good job of identifying the tight areas, but it also depends on what the stock has been doing over that 15 days and how volatile it's been. For instance, during the 2020 correction, if you look at a lot of the stocks like there, where we were gapping up 10%, down 7% the next day, any sort of normal price action would look extremely tight relative to that. Because the stuff before it was so volatile. So, that's something about that. Do you have to see decreasing volatility in the base from left to right because of the Spotify example had increased volatility in late June in the middle of the base? I don't think I showed Spotify, but we'll take a look at that chart. So we had a lot of volatility on the left-hand side, but we did see some tightening here. This was a particular buy point. You can see RMV get very low down here. This is a potential buy point. Hasn't quite pushed up higher, and we haven't seen explosive volume yet. So it could be that it forms one more contraction right here. Ideally forms a range a few days. RMV comes down even more, and then pushes out on volume. But we're seeing a lot of volatility early on, but we are seeing contraction from left to right during the base. And overall, volume's okay. We did see a spike here with earnings. You can almost ignore that from judging the volume pattern because there's always going to be high volume on earnings, but definitely you'd want to see really high volume on any breakout from a consolidation that comes here. All right. I think we can call it there pretty much, Tyler. So thank you guys all for tuning in. Hopefully this was helpful to you guys. And please reach out if you have any questions about Deepvue in the Discord. Reach out to us at hello@deepvue.com if you run into any issues or have any questions. And Tyler answers everything during the day, answers thousands of questions. So make sure to keep them coming, keep him busy over there. And we'll see you guys in future videos and presentations. Thank you.